The economy has slowed down sharply in the third quarter of the current fiscal. According to figures released by the government this evening, GDP growth rate slowed to 4.4% in the October to December quarter. This is in sharp contrast to 6.3% in the previous quarter and 13.5% in the April to June quarter. The sharp slowdown comes on the back of the manufacturing sector, which contracted by 1.1% during the period. The industry managed to register an improvement over last year, but the services sector also slowed down. The crucial agriculture sector grew 3.7%. The government has kept its growth estimate for this financial year unchanged at 7%, while revising the last year's growth to 9.1%. Business Today TV Managing Editor Siddharth Zarabi spoke to Saugata Bhattacharya of Axis Bank and Madan Sabnavis of Bank of Baroda on the latest numbers. Here's an excerpt.
On that, Saugata, to you first, 4.4% in the third quarter.
Slightly lower than what we had expected, 4.6, but that's okay because given the levels of uncertainty, it'll be the internals that will matter most. That's the GDP number. What the GVA number would be, whether it's 4.3 or 4.4 or whatever, which will be the key indicator for this. And on the other side, we are talking about the demand, the supply side, agriculture, industry, services. Where the number slowdown is coming in from the demand side, personal consumption, private consumption, government consumption, investment, etc., will be a key thing to watch out for.
Madan?
You see, the impression I've just looked at the numbers, it looks like that the GVA increase has been something like 6.6%. So we are talking of a slightly more impressive growth rate than what we had expected. And I think the service sector has delivered very well. So I think this growth number seems to be more in lines with what the RBI has projected. So to that extent, I think it's not really off track. And we, of course, had a number of around 4.6% for the third quarter. So this would be slightly lower than what we had projected. But as I mentioned earlier, I think this number does say that we're very well on track of getting this number of 6.8% for the entire year.
All right, and we have some more details that are coming in at this stage. The full year growth number seems to have been retained, and the versus number that we are seeing on the screen for the comparable quarter should be 5.4%, and the latest number is 4.4%. The whole year growth that is being spoken about, and I'll request my producers to bring that up, that estimate remains unchanged at 7%. Saugata, why would that be the case for a full year estimate to be maintained at 7%?
So again, we had actually expected a slight uptick to 7.1% given the numbers. Because remember, these numbers are based on extrapolations of trends in the past. We still don't have the full year numbers. Q4 numbers are largely unavailable. So we were expecting a slight uptick to 7 from the earlier 7%, the first advance estimates, now to 7.1% in the second advance estimates, based on the leading indicators that we track. There was a small jump in the agriculture numbers, in the mining numbers, in the electricity numbers, etc. So we had expected a slight jump, but overall, this is completely on track. Particularly given the slightly lower number, the 4.4% in Q3. So this is probably on expected lines.
Okay, Madan, as we get more details about the numbers, and we are trying to bring that up, you very clearly, just to recap for our viewers at this stage, third quarter growth at 4.4%, below most of the estimates that we were seeing. The full year estimate being retained at 7%, and as we get more details on the numbers as we put them up, agriculture growth at 3.7% versus 2.3% in the same period a year ago. More of those details are coming in. Madan, given this, coming back to you again, your thoughts about what's happening as far as agriculture is concerned?
So I think the agriculture number for the third quarter at 3.7% is more a reflection of the Kharif crop. It does not tell us about what is going to be the fate of the Rabi crop. So I think this is pertinent today because we are talking of extreme heat conditions which have developed, especially in the northern part of the country. And that's something which has the potential to affect the wheat crop. So I think there could be some kind of a negative surprise out there. So while the overall growth which the NSO is talking of is 7% for the year, we would still stick to the number of 6.8% for the entire year. And I think the difference would probably be accounted partly by the agricultural production, which could turn out to be lower. But I think when I look at these numbers, Siddharth, I think most of the sectors seem to be doing very much on expected lines. But I see a negative growth when it comes to manufacturing, the value added in manufacturing. So I think that is something which would, again, I would say if it was expected, the number would be on the lower side because of the fact that a large part of this is based on corporate results. And the corporate results for the third quarter did show that profits had actually come down. If you remove the BFSI and the IT sectors, if you remove the service sector, we actually were looking at profits coming down. And I think that's something which is getting reflected in terms of manufacturing output going down. Others, I think the other sectors, especially the service sector, has been showing a lot of buoyancy. And I think the pent-up demand, which was reflected even in the PMI numbers all through, is finally also getting reflected in terms of the value addition numbers, which we see in front of us for the third quarter.
Some more numbers that I have now, viewers, and I'll just take all of you through those. Please bear with me. India, October, December, the third quarter, mining sector growth has come in at 3.7% versus 5.4% a year ago. The construction sector growth is at 8.4% versus 0.2% same period last year. The October-December GVA number growth 4.6 versus 4.7% a year ago. Manufacturing, which was just being spoken about, has degrown, is at minus 1.1% versus 1.3% the year ago. Farm sector growth at 3.7% versus 2.3% a year ago. The FY22 GDP growth estimate has been revised to 9.1%. That is the revision that has happened for FY22. As you all know, the second advance estimate for FY23 and the first, second and third revised estimates for 3 financial years have also come in. FY23 GDP growth is unchanged at 7, and the details really, Saugata, I'm coming to you. Please share with our viewers, what do you make of the sectoral numbers that we have just read out?
So, the first remarkable thing is the revision in the FY22 growth number that you mentioned, 9%. So that's probably one of the reasons why the 7% instead of the 7.1% that we were talking about has actually come about, because the base effect is now higher, base effect of the previous year's growth. Number one. Second, in terms of manufacturing, that we had a fairly good idea because a large part of that also comes in from the IIP. Where we know that there has been a significant amount of weakness in the third quarter. The IIP numbers are actually also negative. So I mean, so that is something which is expected. Overall, industry, which is a combination of manufacturing, electricity, and mining, the two together, and the mining numbers that you have just said, it was 3.7 is very strong. In electricity numbers too are relatively strong. So overall industry level growth will probably be around 2.2%. One of the reasons for the drop in the manufacturing segment is the fall in commodities prices.
If you like the video, do like, comment, share and subscribe.